when you get a check, you take a portion out, put it in a savings account, you put it in a separate bank if you have to, so it's harder to get to. But you do that with every check. And that way you're actually building up a profit over there.
Right.
And then we go back to Parkinson's law, where we use up all the resources available. Instead of having $100 available, I only have 90. I'll still pay all my bills. It might take a little bit longer, but this time when I pay all my bills, I now have $10 sitting over here in the bank,
Right.
rather than having zero.
This is Conquer Contractor Chaos, built for the contractor that's ready to run a business that works for them and creates the life they've been fighting for. Tune in to get the tools, systems, and strategies that are battle-proven to set you free. One move each episode, straight talk, things you can use today. Take your time back, be home for dinner, do the work, lead your crew, love your family, conquer the chaos.
Hey folks, welcome back to the Conquer Contractor Chaos Show. I am here today with Jeremy Lott. Jeremy is a contractor who joined the dark side and went to the accounting side after running his construction business, which we'll get into in a little bit. But if you're someone who's came here because you want to stop guessing about your money, you want to start to understand how to do job costing, cash flow, get some simple weekly money operating tips, and leave with 2 or 3 actions, I think this podcast is really going to hit home for you. Jeremy, why don't you introduce yourself? Tell us a little bit about your background. Where did you start and where are you today? And then what do you do for your clients today?
Yeah, I went to college on a wrestling scholarship, and I found out about horticulture while I was there. And so I jumped into horticulture because I'd been doing landscaping for a few years and absolutely loved the degree. It is absolutely worthless degree because you don't need a degree to be a landscaper. But I can tell you all kinds of things about dirt and water and the growth of plants that are, like I said, completely unnecessary. But
Yeah.
but I don't regret it at all. The program also covered landscape design, and that was where I focused my business for 15 years, was on high-end residential design build.
Gotcha.
So we did landscape construction, and you can imagine all the fun stuff that I did. Did a ton of block. We did outdoor lighting. Flew up to Oregon to handpick trees that we then trucked down and planted by crane, custom statuary. I did a custom balustrade. It was all kinds of fun stuff.
Yeah, we're not talking mowing lawns here. We're talking full on landscape construction, right?
Yeah, exactly. So I mean, it was so much fun, and I absolutely loved it. I never understood my money. I always had cash flow problems, and I solved all my cash flow problems the same way most contractors do, which is to sell 3 more jobs.
Of course.
Three more jobs, 3 more down payments, and you're good to go. You got money in the bank again, right?
Yeah.
Well, 2008 hit, and nobody was doing high-end residential design build anymore. And I actually ended up bankrupt that year.
No way.
Yeah.
And for those who don't know, 2008 was a recession that we went into. The construction trades got hit very hard. Personally, I got laid off as a contract floor layer at the time, which is where I split off and got into like hospitality instead of construction. But yeah. Totally. 2008 was the worst. So for anyone who's listening who wasn't around in 2008, just know this happened, and that's what gives us the fear nowadays with our businesses.
Yeah.
You know? Okay.
Yeah, exactly. And you know, so it was an awful experience, like you just said. A few months later, I went in to get my taxes prepared, and I was chatting with my accountant, and you know, we were covering all the topics for my taxes. And we got on the topic of my bankruptcy. And, he was typing away at his computer, taking notes. And he stopped typing. He turned and looked at me and he said, "Yeah, I've seen that coming for several years." Obviously, I was a little bit floored. I mean, I was a typical contractor. I didn't really care about money. I just want to be able to do these awesome things and support my family. That's all I wanted to do. And I relied on people like him to help guide me in the areas I wasn't strong in.
Mm-hmm.
And, being the competitive person that I was, I decided I was going to show him. And I was going to learn everything I could about accounting, become an accountant, and be the accountant that my accountant wasn't for me.
Amazing. I love that. I love that. And I'm not going to make it any kind of secret here. And my clients will laugh at me when I say this because they're going to listen to this.
Yeah.
And they're going to say, Lee hates accountants. And I will say, yes, 100%. I don't hate you personally, But when it comes down to it, I think there is, the bar is on the floor for accountants, and whether it's through a lack of knowledge, a lack of specialization, or maybe they use virtual assistants and they're lazy, most of them.
Yeah.
That's left a better taste in my mouth when it comes to accountants, especially when it comes to contracting, because when we outsource to accountants, it's because we have no passion for the topic. We are not good at it.
Right.
And we'd rather pay money to have someone else deal with it with us so that we can do the part that provides value, which is selling jobs, making the jobs, or building the jobs. And then, the other stuff, not the admin, not the,
Yeah, exactly. It's funny because I remember sitting in one of my classes in college, going back when I went back to school. I was 35 and had a mortgage and wife and 3 kids. And I went back to school to take all these accounting classes. And I remember I was sitting in one of my classes one night and this teacher wrote this equation up on the board, this math equation, right? I wasn't ever bad at math. So I understood kind of where he was going with it. I had no idea what it was. But I'm sitting there looking at this equation and it ended up being the equation for an internal rate of return, right? And then the teacher started explaining it. And he was saying, okay, so if you're a company and you have an extra, say, $100,000 laying around, and you are trying to decide whether to invest it in the market or to invest it into a project with your company, then you do all these cash flow things with these 2 different projects, and then you run the numbers through this internal rate of return, and it will tell you which project to pick.
right.
And I'm sitting there listening to him explain it. And the first thing that struck me is, I'll tell you what, man, I never had a time when I had $100,000 sitting around as a small business owner, right? And even if I did, I'd definitely go into my company. I wouldn't be putting it all in the market.
Yeah.
That's for my personal money. I need to invest personally and build that up over there. So that's when I kind of realized that the accounting industry is so screwy. And we've made things so complicated.
Yeah.
And your viewers or listeners might like to hear this, but it really is the government's fault. I
would
mean, all of
100%
these
agree.
rules,
Yeah.
all of these rules came about because of the market crash in 1929.
Right.
And we started using financials that had so many rules and restrictions on what you can put where and how it has to look. And now we have a profit and loss and a balance sheet, and everybody's scared of it because we don't even know what the heck goes anywhere. It means nothing to us.
100%.
Right?
100%. Typically,
So
when when we're talking
Mhm.
about accountants and a lot of people would immediately just go, accountants equal taxes, right? Like
Yeah.
that's the value. I'm not a big believer in that, right? We've got a program within
Yeah.
our coaching system where we say, no, an
Oh,
accountant is
cool.
one of your gatekeepers to that net profit check coming, and they are an integral
Yeah.
part of the system.
Yeah.
You know, like what do you think? You know, would you say that that's the case? Most accountants are just there to help you with your taxes or yeah,
Yeah. Accountants and then bookkeepers
yeah,
also, but they're all playing within this box that the government has created,
right,
right? We like to get outside of the box because within the box and all those rules, you can't really make good business decisions, right?
right.
Like you mentioned job costing at the start. Within that box, I can't really job cost accurately.
Mm-hmm.
And so we use M&Ms to teach accounting
Right.
because colors are a lot easier than numbers,
That makes
right?
sense. I like that.
But, just a really brief example, when you have a truck payment, that never shows up on your profit and loss. At the end of the year, your accountant figures out depreciation for
Mhm.
you for your taxes, right? And it may or may not get recorded on your profit and loss. But for the
Right.
most part, it doesn't. But you know what? Dang it. If I'm figuring out how much it costs me to do a job, I got to have my truck to do it. So I've got to get away from the profit and loss and I've got to include those costs so
Right.
that I know what it's actually costing me to do a job.
Yeah. So you're factoring in some of your fixed expenses, right? Which I mean, variable fixed expenses is a weird way of saying it, but you're costing with your net profit in mind. Essentially, you're saying, okay, based on my fixed expenses, I'm going to allocate a portion of that to the job cost, so that they
Yes.
pay for it, so that and then I'm going to add a line item for net profit, and then I'm good to go, right?
Yeah, exactly.
Gotcha.
And when we break it down with the M&Ms, we actually only have three groups. We have the revenue,
Right.
and then the second one is on the truck costs,
Mm-hmm.
everything that you put on the truck to go to the job site. And then the third one is the hill.
Yeah.
And the on the truck costs are a percentage of revenue.
Right.
So if you double your revenue, you double your on the truck costs.
Gotcha. Yeah. So it's a
It's back
ratio.
to the fixed
Yeah,
and variable type
for sure.
concept.
Yeah.
Whereas the selling general and admin expenses, which are the hill, those don't change. You
Yeah.
can double or triple or 10 times your business and your hill only goes up just a little bit.
Gotcha. Do you call it the hill because it's very easy to get buried under it in your fixed expenses?
That definitely could be. Yeah.
Yeah. Yeah, for sure. No, and I think, for you guys listening, and if anyone who's in our program, you would have seen two very distinct tools that we use. We've got our cost card, which is your kind of, it's not quite Jeremy's example. That one is literally just revenue minus labor, materials, and consumables, right? Similar. The tool that Jeremy is talking about is our EOJ, our end of job costing tool, which is the one that you factor in your net profit with, the one that you factor in your fixed expenses. It's a bit more of a complex system to use, but I think you need to start somewhere, right? Because I mean, I think for the average contractor, they're probably not even that costing at all. They're probably just going, well, there's money in the bank account. I think I made money,
Yeah.
right?
Yep.
Yeah.
Exactly.
That's typically the way that this goes. Let's jump straight to the pain that these guys are feeling, right? And just for
Mhm.
background context, Jeremy, like I own the construction business and several
Yeah.
other businesses, right? So I've been here and learned the hard way, right? Oh, never
Yeah.
never went full to bankruptcy, thank God, but was extremely close, more than once. But when a contractor says, "I'm really busy, but I'm broke," what's happening? In your view, what's happening?
Profit is not money in your pocket. Plain and simple. The problem is every time a cash flow issue, and it deals with several different principles. uh, The first of which is no strategy for paying your bills.
Right.
Most contractors, they get paid and they sit down with their stack of bills. They'll pay this one and they'll pay this one and they'll pay this. And they just kind of go through the list until they've used up all the money, right? And then they wonder why they don't have any money.
Right.
Well, it's because you just went through your stack of bills. And so we teach some different strategies on how to pay your bills so there's money in the account. But the other big problem is something called Parkinson's law. And I did well in high school. I graduated with like a 3.98 GPA or something like that. I worked really hard on it.
Mm-hmm.
And I always did all of my homework, which is huge in high school. But if I had 30 days to do a book report, I started it 2 or 3 days before it was due.
Right. For sure.
Right?
Yeah.
And I don't think I'm alone in that. I think pretty much everybody does that. Right? And this is what we call Parkinson's law. The official definition is basically that we use up all the resources that we're given. And so in this case, I was given 30 days to do a book report. So I used all 30 days rather than just finishing it up in the first 5 by spreading it out a little bit every day. And then, having nothing for the rest of the month. Well, the same thing happens with our money. We have this equation in our head that is income minus expenses equals profit.
Yeah.
So basically,
okay.
basically the mindset is, here's all my income and I'm going to take all of my expenses out of my income. And if there's anything left over, I have profit.
Right. Okay. Gotcha. Yeah.
And so instead, what you do to beat Parkinson's law is when you get a check, you take a portion out, you put it in a savings account, you put it in a separate bank if you have to, so it's harder to get to. But you do that with every check. And that way you're actually building up a profit over there.
Right.
And then we go back to Parkinson's law, where we use up all the resources available. Instead of having $100 available, I only have 90.
Right.
Well, I'll still pay all my bills. It might take a little bit longer, but this time when I pay all my bills, I now have $10 sitting over here in the bank,
Right.
rather than having 0.
So, and my mind is immediately going to the profit first model.
That's it.
Right. Michael Michalowicz, where we actually have a module in our school course, which literally gives you recommendations. Take that 10% of net profit, when you get, or take 10% when you get your deposit, move it into that ideally some sort of high yield savings account, like a money market account.
Yeah.
And let it compound at 4% a year in the background, and it's out of sight, out of mind.
Yes.
Yeah. 100%.
Exactly.
So, like if that's the case, right? Like guys have that Parkinson's effect. I think that's what you called it, right? I love that, by the way. But you're totally right. It's when the resources are all sitting in front of me, it's easy for me to make decisions when I've got so many options. But when you restrict yourself, now you need to be a bit more kind of controlled with the decisions that you're making, right? Similar in like marketing, for example, where, you do these big pushes of marketing initiatives, you get a couple of leads, you stick your head down, you use up your resources, and then you look up and you go, wait, where's my next job coming from? It's just the same thing, but with dollars, right? Where's my next dollar coming from? Yeah, I feel you.
Yep, exactly.
So would you say that that's the biggest mistake that contractors make is staying in that Parkinson's effect there? Like, yeah.
So yes, the other big problem we kind of already spoke about a little bit, which is not knowing what it actually costs you to do a job.
Right.
And then bidding should be super, super simple. Here's all my costs to do the job. I add a profit on top of it, and I give the price to the customer, right? But when we get into unit-based pricing per square foot, per linear foot, per yard of concrete, I don't know if I'm covering my costs for that job. And I don't know what my profit is. So I'm just kind of doing throwing a number out there and hoping that I make a profit.
Right.
And so, that's the first thing that we usually focus on, is making sure that the bidding process is profitable on every job.
Yeah. So it's labor cost with burden times 2 is your 50% gross. And then material cost, same thing, times 2. And then consumable, so you're going labor and materials rather than linear foot, square footage, right? You're drilling it down into tangible numbers that you can predict. Yeah.
Yeah. That's definitely the idea. The other thing that we emphasize is that in order to not miss things in a bid, we need to focus on a process-based bid rather than just focusing on costs.
Right.
So we go through and we list every step in our process, traveling to the job, talking with the owner, all of the things that you're doing, setting up, laying out, all of those steps, because there's labor in every one of those steps.
For sure.
And there's going to be overhead attached to that labor in all those steps. And then you can go through and make like a grid. So you've got your processes down the left. And then across the top, you have your labor and your labor overhead. You have your materials and your materials overhead. And then you have subs or equipment rental, any of those other direct costs.
Right.
And then you just fill out the grid, each one line at a time. And that tells you what all your costs are.
Gotcha.
And then we actually mark up the overhead allocation as well.
Right. So it sounds to me like you're going, let's stop. Your labor costs something. If you're taking a salary, even if you're the owner of the business and you're on a salary, which is traditionally kept in your fixed expenses, your time is still being paid for job by job when you're estimating, when you're running out to grab materials, when you're out there, schmoozing the customer because something happened, right? Yeah. Like that.
Yeah.
Somebody has to pay for it, right?
Yes. Yeah, exactly.
Yeah. So, one of the things that I talk about a lot with my clients is getting, because getting through phase 1, we say don't talk about net profit until you've mastered how to figure out gross profit, right? Because without gross, there is no net left over, right?
Yep.
When we're training our clients, we typically say, let's get everybody involved. If you've got someone who's on the team who's like a foreman, a job site manager, maybe some employees, how important is gross profit to them, and knowing why, knowing what gross profit is and how they contribute towards it?
So I'm with you 100%. Net profit is a dollar amount to me. Gross profit is a percentage. And that tells me how many cents of every dollar I'm making to then use to run my business and to pay myself. Right.
Yeah.
And so I actually teach using gross profit on a job to incentivize people.
Yes.
So if here's our budget for the job. Here's what we're guessing our gross profit will be. If you beat that, then I'm either going to share some of the gross profit with you, or I'm going to get you movie tickets or a gift card for a nice restaurant. It doesn't have to be something big.
Yeah.
Right. It's just that recognition and reward. And, we're not much different than dogs. We tend to continue to do what we're rewarded for. Right.
Yeah.
So at least I am. I don't know about anybody else.
No, for sure, man. For sure. And I like where you're going with this, Jeremy, because when I'm teaching this, I'm saying you're not playing with house money. You're not playing with money that you traditionally would have taken anyway. The incentive is there for any additional funds that were, if they push themselves past the threshold and they apply themselves, they make a bit of money. You make a bit of extra money on top of what you were already going to make anyway. Yeah, 100%. Give me an idea, because I get asked this quite a lot, and I've got my own methods for like how to incentivize people, a quarter of a percent this, or, you get a time bonus if you complete the job 10 hours under goal, target, whatever. Give the guys a couple of examples, like how should we incentivize our people just as a foundational starting block to giving incentives for higher GP?
Yeah. So if you're bidding as a process, then at the end of it, you have, like you were saying, a budget for the number of hours on the job and for the materials and subs and rentals and all that stuff, right? And then they have that number to beat on each of those different categories. And then you can say, hey, if you beat this budget by 10%, then here's, a movie ticket. Or if you beat this by 20%, then I'm going to give you 10% and I'll keep the other 10%.
Right.
It like you said, you're playing with house money at that point. It's not money you were expecting at all. And so I've found that being generous is a whole mindset, that abundance mentality. And when you look for excuses to reward people, then I find it comes back to you.
Yeah, 100%. And you can also say goodbye to tenure-based raises and bonuses when that comes around. Because now when you sit down to interview someone and they're saying, hey, I want to make $40 an hour, you can then say, well, how does $60 an hour sound if you apply yourself? Because there's no cap on this, right? You're coming in asking for $60K a year. I'm giving you opportunities, whether it's through a gross profit margin bonus, whether it's through getting me social media content, whether it's getting me Google reviews from your customer, right? Those are worth $20, $30, $50. If you upsell something, if you train someone, there's money on the table for you. Your earning potential is squarely in your hands. And now we're not going, well, I feel like I need a raise because I've been here for a year. No, you had that opportunity all along.
Yeah.
Love it. Yeah.
Yeah. And it's a higher quality employee too, because they're taking ownership of the work.
Yeah.
Right?
And they start to police themselves too, because when the guy is dragging his ass and he's not performing, the rest of the team are saying, hey, you're affecting our bonus pot. So, Mr. Bossman, get rid of that guy,
Yeah.
Yep. I don't know if you've seen that. Don't know if you've seen that clip. It's the hello, Mr. George, the new guy. He's no good. It's similar to that, right? Your guys start to police their own and eat people, right? But like I always say, this is it's a pro sports team. It's an NFL team. How do they treat their people when they don't perform? Right? They get massive bonuses when they score. They get cut at trade-off season if they don't perform. Same thing with us here as well, for sure. Yeah. So let me paraphrase. So we're talking, we should be tracking labor.
Yes.
We should be tracking materials. We should be tracking consumables or job costs, right? As well. Yeah. Speak to burden for a second, because I find myself explaining this to people all the time when they say, what is burden? What does burden mean? Why don't we let it come from a CPA today?
Well, I'm not a CPA, so I do. I want to make sure that I don't get in legal trouble there. I took all the classes. I can sit for the tests. I just don't need the CPA designation. But anyway,
let's hear from a finance professional.
There you go.
There we go.
So when you're doing your job costing, there are some things that you get a receipt or an invoice for, and it goes to one customer, right? I go buy this lumber, it goes to this customer. I go buy this flooring, it goes to this customer, right? That's really easy to determine. Those things are called direct costs. There are other things that you put on the truck that goes to the job site that are not one receipt for one customer.
Right.
Some of those things are like a cell phone, like the truck payment that we mentioned earlier, fuel, maintenance, repairs, all that kind of stuff on the vehicle, your insurance, your people's, what do you call them? Insurance and different benefits that
The
they
associated
get,
cost with
right?
having employees, essentially. Yeah.
Yeah. Yeah. I can't take my insurance bill that I just paid and put it on one job. So instead of taking that and putting it on one job, what I'm going to do is I'm going to take all these other receipts for all the other things that go on the truck to the job site. I'm going to put them in buckets, and I'm going to put a label on those buckets. And in one bucket, typically what I use is labor and materials, because there are some overhead items that will increase if I have more labor. If I have more labor, I need more cell phones. I'm going to need more insurance.
Yeah. More
Yeah,
insurance. Mhm.
right. Exactly. Whereas if I have more materials, with more materials, that's going to mean more trips to the supplier. So there's going to be all the vehicle expenses related to that, right?
Right.
And so I like to separate those out and then have a way to pour this bucket out onto the job and then take this bucket and pour it out onto the job as well, right? So let me back up and simplify that. We have the labor bucket of overhead, and we have the materials bucket of overhead. And we've put all these amounts into there, right? To figure out how much we're going to pour onto each job, all we do is, if we've taken all of these overhead items for a year, we're going to take the total labor for a year and just divide the bucket by the total labor. And that gives us a percentage.
Right.
So if we end up with, say, 16 cents, we now know that $1's worth of labor doesn't cost me $1.
No.
It cost me $1.16,
Yes.
right? And the same thing with the materials. If we end up with, say, 12 cents on materials, then $1 of materials actually cost me $1.12, right? And those are all costs. And so that's kind of the way to look at it, is that you're throwing all these things in buckets, and then you're going to pour those buckets out to figure out your costs up front when you're bidding, and to figure out the job costing on the back end.
Makes total sense.
The
Yeah.
reason that I use different buckets is because there are scenarios where you have a job that is really high in labor, takes a ton of labor, and the materials are kind of down low, right? So that overhead isn't going to apply as much to this job.
Right.
And then the opposite can be true as well, right? And so because you have those two different factors going on, I like to split up the overhead and allocate it separately there.
Yeah, so it's worth knowing what your labor to material split is on average. What is your percentage of labor, right? And I think what Jeremy's saying here as well is, like, burden is an associated cost with, that maybe you're not paying in real time by the hour, you're paying it over the course of a month. Like, burden, for example, would be, if you lived in, let's say, Wisconsin, right? You would have a burden percentage for workers' comp, insurance, benefits, 401k contributions, any kind of, and then any state deductions that come from that as well, which, you can get away from that. If you don't want to pay all those extra costs, use subs, right? You can use subs. They deal with their own. You just pay them a cut of the labor percentage. You're good to go. If you're going to have employees, you need to know what that burden cost is. And I will say this, everyone is different. There is no real method for you to kind of generalize this. You need to go back to your accountant and ask them, hey, based on prior data, what was my overall burden rate? So that you can say, all right, my burden rate is 24%. So it's going to be labor times 1.24, right? Or even as high as 1.4 if you're someone up in like Canada who is getting, absolutely destroyed
or
with
California.
California. Yeah, for sure. So it is different. And I highly recommend you go speak to your accountant and ask, what is my burden rate, and start charging for it. Because here's the alternative. And Jeremy, I'm pretty sure you'll agree with me on this. The alternative is don't track any of this. Just charge such a high cost that you don't even have to worry about it.
Yep.
That's one method there for you. I like what you're saying. I like what you're saying, and I think for a lot of contractors, it's just like, you're not going to just know this stuff. And if you wanted to go find this out yourself, you'll be digging online in a million different buckets with the wrong information or information that doesn't apply to you. So really the best way to do this, guys, is really find someone that you can work with locally that knows your market and knows your trade. And this is why, I would very rarely let an accountant onto my show here. But because Jeremy is construction specific with construction experience, we've made an exception this time. But general accountants, they don't know the nuances of the industry. They don't know what a material is. They don't know direct versus indirect labor, right? Like they just don't know, which is why you need a specialist accountant. Would you agree, Jeremy?
Oh yeah, of course. It's a lot of accountants, the only business they own is their accounting business.
Right.
And it doesn't compare. It really doesn't.
No.
So
no,
yeah, you definitely get.
Yeah, I'll tell you why you're a bit of an anomaly, right? Because if we were to go to a psychological level, and we were to get you to do, we've got this thing called the predictive index, which is it's a profiling tool that tells you your personality type, your strengths, your weaknesses, that kind of thing. If I was to put you through that, I have no idea what the hybrid results would be. But for your typical accountant, you could say, hey, that person is very risk averse, they're very detail orientated, they're very analytical, but they're not very creative, out the box thinking, or, they don't want to take risks on. So you can kind of profile. And then a contractor, especially a guy who owns a contracting business, is usually someone who's the complete opposite. They take risks, they are excited, they are usually massive, extroverts, but they're not detail orientated, which is why it's so funny that we found someone here who's kind of both of those, if that makes sense,
Yeah. In a way, there are definitely details that I do pay attention to. And for all the other details, I have a team.
Yeah.
And the team is really good at the details.
Outsource your weakness, right?
Yep.
So I'll tell you the method that I teach when it comes to backhaul.
Yeah. Okay.
One of the biggest reasons why I find that people don't backcost their projects, right, is because one, they don't understand the value that comes from backcosting. So I'll stick on that for a second. When you backcost, you learn not just about the money mistakes that you made, but you learn a whole lot about the client that you're working with, the trigger that's your ideal trigger of why someone's working with you in the first place, right?
Yeah.
You learn about the products that you're selling, the ones that make money, the ones that don't make money, the ones that are time intensive. And you learn a lot about your future scalability from the projects that you're doing right now.
Agreed.
And we've seen this firsthand with our clients where we've said, hey, we need to look at your product list and look at your list of back costing. Let's pull those 5 products and throw them off. Let's very hyper focus on just these 3 things that are easy to produce. There's a good upstream referral partner like an interior designer rather than going out and working with homeowners direct. And you're going to be making a 55 to 60% gross profit margin, which we'll get into GPs because I'm curious what your what your experience is with what is the average GP for a contractor who isn't paying attention to their numbers compared to those who are. But for our guys, we've definitely seen it up at like that 55, 60% when it's almost like a DJ board. You're kicking little buttons here and there, we've got no idea what those mean, but like it's about refining those down. So yeah, like that's what I would say the benefit is. The system I teach to get on board with your numbers, at least just to start off with, is to fix your data channels. That's where we have to start. Jeremy, do you ever see it when you're like, hey, what is this number? What is that number? And they go into their QuickBooks and they go, that doesn't sound right. You ever see that? Yeah. How does confidence in your numbers play a part in this, being able to back cost and get all these benefits back?
I can't do anything without numbers. Zero. We do bookkeeping as well. And the biggest reason for that is because I have so many people that don't trust their numbers.
Yeah.
And, like you said earlier, you can take the method of, I'm going to price it so sky high that I've got to be making a profit on it. Right?
Yeah.
Or you have to really understand what your business is saying to you.
Mm-hmm.
And so we definitely have to have clean numbers. And I'll tell you, I play marriage counselor a lot because and you'll probably laugh when I say this, or you probably already know where I'm going with this.
I do.
But there are so many spouses that are doing the bookkeeping for the owner, for the contractor. And that's wonderful, and it saves money. And you have to do that when you're bootstrapping and building things up. But my goodness, people, get a professional.
Mm-hmm.
Be able to pull up QuickBooks and see, oh, yep, my bank balance matches my QuickBooks balance.
Yeah.
That's how much money I have available in there, as opposed to, well, I'm going to open up my banking app and this is how much money I have to spend.
And what's
Except
on your
for the
credit
10
card?
checks I wrote.
Yeah.
Exactly. Yeah.
I feel you, man. Yeah. Yeah. And I'm totally in that boat myself, because my wife does my books too, but has this background, right? So,
Well,
but
and
yeah,
like I said, there's nothing wrong with that.
yeah. But at some point you will outgrow that, where you need someone that has a bit more advanced skill when it comes to the nuances of, say, QBO or FreshBooks, or,
Right.
whatever your platform is that you're using. And I think the biggest thing is, again, they might not know what's a material and what's a labor hour. They might not know that, how to categorize something properly. Because I think one of the things is, you kind of preach on simplify, right? Simplify your book, keep it keep it very easy for a contractor to read. And I say, the way that I do it is, as I'll say, no, I want you to go deep on your fixed expenses, break it all apart, try and see in your P&L list exactly where every single thing is. Because when you do that, you can then build a budget. And that's the critical piece that so many people are missing, in my opinion.
Yeah, no, agreed. And to clarify, someone has to go deep on your books.
Right. Yeah.
I'm saying you got to have somebody that stays inside that little box and that goes deep on the detail, right?
For sure.
As the contractor, it's important to have all that detail. But then when you're going to make business decisions, then you can take all that detail and simplify it to put together, like I said, is it on the truck or in the hill?
Yeah.
That's really all you need to know for making 3/4 of your business decisions.
Mm-hmm.
It is always, always, always easier to have an abundance mindset and figure out a way to provide additional value or communicate the additional value to your customer and charge more than it's ever going to be to dive in and to cut costs, right? If I want to move my gross profit margin up 3% and I'm $1 million company, right? That's $30,000 I have to cut.
Yeah.
That's not an easy task.
Significant. Yeah.
Even for $1 million company.
Mm-hmm.
But if I increase my pricing by 3%,
Like
I'm making that much more money, and nobody's going to lose a customer over 3%.
Yeah. No,
It's not going to happen.
No.
Right?
And if we wanted to throw a challenge out into the world, I'll take a couple of volunteers, one to bump their pricing by 3% and see what happens, and the other one to nickel and dime their profit and loss statement and call up every vendor for every little software subscription you got and try and negotiate a deal down. You know, instant decision versus weeks and hours of work to save that 3%, 100%.
Right.
Yeah.
Yeah. And that is all important, but you get to that after you've taken care of the big, glaring, obvious problems.
Yeah.
Right. That's the refining. That's the fine refining on the other end.
Yeah. I think not a lot of guys understand that your workflow on the project matches the workflow of your profit and loss statement, right? Where if you're looking at a P&L, it literally shows you, here's how you performed in sales. Start there. Does your price need to go up, or do you, do you need to do more volume? And then when it moves into that actual production piece in real life, what's happening there is your cost of goods sold. It's your labor, your materials, right? And then any consumables that you have. Once it's through that part, right? Could you increase efficiency, buy new equipment, get better people, give them new systems to see that number go up? There are options in every level. And then when you get into your fixed expenses, well, I mean, I usually look at fixed expenses and say, this is either a lack of a budget or a lack of a gatekeeper, someone who is there controlling your books, keeping you informed and saying, hey, it doesn't matter how you feel. It doesn't matter how stressed out and frustrated you are.
Mm-hmm.
These are the numbers. This is the truth. This speaks to that and tells you.
Yeah.
Yeah, dude.
Exactly.
As well. Ask me how I know all this, because I made all the mistakes when it came to this.
So
I know.
I've been there, man. I've been there.
Yeah.
That's, it was funny because throughout the whole process, it took me 4 years to get my master's. And that was because I had a degree in horticulture and wanted to jump to business.
Right.
And they said, oh, you can't do a business major or master's because you have no business classes. Anyway, 4 years of classes. And I've read so many books on money and was going somewhere with that. I know.
I think it goes to say, like, yeah, you can read all you want. You can, but when you get, when it's your dollar. Yeah.
Yes. Yeah. And it's the whole time I was going through that process, I was like, oh yeah, I made that mistake.
Yeah.
Oh, this is how you fix it.
Mm-hmm. We call those concrete lessons. Those are the ones where it doesn't matter how much your dad said, hey, don't climb on that, don't swing on that, don't jump on that. It wasn't until you hit concrete and went, well, that was pretty dumb, right?
Yeah.
Yep. So you can, so however you're gaining your competency in this stuff, guys, it's either you're gonna kind of proactively go out and seek the answers and learn this from other people's mistakes, or you're gonna make that mistake yourself. You can't have a business without money. Even not non-profits still need money. They still have an accountant. They still have to deal. Your business, you need to learn this stuff. And you can outsource it for sure, but you still need to know, hey, here's the power of the numbers. Even if it's nothing to do with money and everything to do with productivity or your marketing, right? How many leads, how many impressions, right?
Yeah.
Like, what was it Pythagoras said? Numbers control the universe, right? And it's totally true. Totally true.
Yep.
And that's the shift, guys. You're not tracking for tax season. We're not tracking so we're not tracking so that you can give the numbers to your accountant at the end. It's so that you can make real-time plays. It's exactly like when you're at the Super Bowl, and they have the halftime and they go into that locker room at halftime. And this always casts me back to that scene in Any Given Sunday with Al Pacino. He's saying, you take an inch, it's always an inch, right? You win the game with an inch. They're having a discussion on how they played in the first half. What's the competition like? Where were our weaknesses? What people do we need to move around? We track in real time so that we can say, okay, on the next job, how do I need to change in order to win? This is exactly the same thing here. And so if you get to that, again, we start with gross profit because that's the easiest one to start measuring. Do I have my right pricing and am I selling the right volume? And then you go from there. Then we move into the production. Can I get my labor, more output from my labor, more productivity? Do I need to give these guys new equipment, new systems, new processes? Do I need more vehicles? Can I scale from here? Yeah. And again, I was the biggest pushback. And when my mentor told me, Lee, you need to know your numbers. Surely if I keep my head down and keep painting houses, I'll make a ton of money.
Yep.
Yeah.
Yep.
And here's the thing. I've had years where we did $1 million and lost money or made zero. And I've had years where I did 750K and made more than I did in those 1 million years. This is exactly the stuff that Jeremy's talking about today. I want to get to some like kind of on the ground stuff, right? Like some stuff that we can put in place right now. And I was curious to ask about what your best practice or rules would be for things like deposits, progress payments, right? Like how do we manage cash flow from that perspective while not spending deposits to produce the last project that we just did, right? Like how do we manage deposits and cash flow or progress payments? What's the best system that you've seen?
So what we teach is that you've got to take the emotion out of your bill paying. That when I receive a check from the Smith job, I am going to apply my percentages to that amount I receive, and I'm going to pay for the costs related to the Smith job.
Right.
So I'm going to find the specific invoices from my supplier for the Smith job, and I'm going to pay those specific invoices. I'm not just going to pay off a statement.
Right.
Or over the oldest one. Right. I mean, the contractors are really honest people and they want to do good by everybody. And it's so admirable. But when you look at kind of the hierarchy of things, if you're not around anymore, what happens to the business? It's gone. If the business isn't around anymore, what happens to all the subs and the suppliers and the employees? They're gone.
Mm-hmm.
What happens if you lose a supplier or if you lose an employee or if you lose a sub? Well, yeah, they're gone, but you can replace those, right? And so we need to apply that same priority to our bills and how we're paying our money. You know, first person that gets paid every time, just like you said with your 10%, is you. You get paid every time.
In an ideal scenario, when you've got it figured out.
Well, yeah.
Because you're
But
typically
if we
the last one to get paid after the suppliers, after the labor, after, everything else,
Yep.
after the insurance, after the government, that's when you
Mhm.
get your paycheck, right? That's typical.
That's typical. Yes. Yeah. And so you want to shift that, because unless you're happy and making money, the business is going to be miserable and the business is going to fail. It's a bad situation. Go get a job somewhere else.
Yeah.
If you're not paying yourself.
Yeah.
Right?
It'll be a lot easier.
Yeah. So that has to be number one priority, is taking care of that. Then number two priority is all the money that isn't yours. And that's all the money that goes to the suppliers and to the employees and to the vendor or the subs, all those kind of things, right? That money's not yours. That money from the Smith job goes to the people that worked on the Smith job. Once I've covered that, then I can take the money that's left and figure out what to do with the rest.
Right.
As far as your other payments go. But you have to cover those two things first.
For sure. So I think what we're saying here is to treat each individual job that you're working on like it's on its own timeline. It's in its own reality, right?
Yeah.
Whereas, and if there's stuff left over, then it can go to some pool, but only one, everything's on a separate timeline, everything's on a separate budget. You can't pull all your money into one place. Gotcha.
Yes,
Makes
exactly.
sense. It makes sense to me. I mean, again, I'm excited to have this conversation because I love talking about this stuff, but hopefully the listeners are sitting, with things clicking right there for them.
Yeah.
So, we typically recommend 50 to 60% deposit up front, right?
Right.
With
Yeah.
with getting your getting your final payment no later than the last day of the project when you're on site, right? So no more sending invoices and then chasing them. If you need to get a credit card reader, take a credit card, because the 4% you'll pay or 3% you'll pay on that, it's better to have it 2 weeks or 4 weeks sooner than you would later on.
Yes.
Yeah. So would you say like 50 to 60% deposit is like a good starting point to start giving yourself that kind of financial cushion?
I think that's a great place to start.
Mm-hmm.
Yeah. There's a lot of people that don't believe you can get that kind of money up front,
You
but
totally
it's just
can.
not true.
Yeah.
You definitely can. You set the rules,
Oh yeah.
right? And then the other thing, along with taking the credit card reader to the job site on the final day, is maintaining your mechanics lien rights. There
Mm,
are, in every state, there are mechanics lien rights, which basically means that if you have someone that doesn't pay you, you can lien the property. And then if they're trying to refinance, or if they are trying to sell, there's a number of different scenarios. And in most states, you can actually force a foreclosure to pay for it. But that doesn't just protect you and you getting paid. It also protects your suppliers and your
right.
subs, right? And I can't tell you how much quicker a general contractor responds to somebody who's maintaining their lien rights
Right.
compared to someone who is not, right?
Right. Because I think at the end of the day, like all of us want to look after our own cash flow.
Yeah.
Even the general contractor, if he's not being paid by the client
Yeah.
yet, it might not be that he doesn't want to pay you. He's just looking after his
Right.
own cash flow to pay his guys in the
Mhm.
meantime. Right. And it's kind of one of those,
Mhm.
well, how much do I like this guy? Do I want to tell him, hey, get me paid, or can I float 2 weeks? Right. Because even at
Yeah.
that, right. And here's one of the things I always teach as well, Jeremy, not to hijack the whole show, because you're the expert here.
Whatever.
No. But one of the things I say is like, hey, like if you're not getting paid for 30 days from a general contractor, you're floating material costs on a credit card or with some sort of interest that's racking up in the background. The sooner you get paid, the more money you save, because it's not like you're just not losing money in the background. You're paying interest on that credit card. That's why you need to get paid quick. And yeah, GCs, they're going to try and look after their cash flow because their business is a lot more complex than just your painting or plumbing or, carpentry business. They've got subs and big vendors and permit costs and engineers and architects and all these other people with their hand in the profit pot. And they
Right.
pay for that because they're doing volume rather than making tons of money from one project, right? They're doing, right, okay, well, you might have a $20,000 project right now. They've got $20 million worth of projects in a year, and they may be happy taking 6% net profit on $20 million, right?
Yeah. Yep.
So you need to take
Exactly.
control. You need to take control, and you need to stand your ground. And ultimately, at the end of the day, you get to decide who you work with, and your numbers will tell you exactly who you're working with. In
Yeah.
my opinion,
Yeah. Nope. That's true.
So 50% deposit, guys, get that credit card reader. That's my advice, right? Get that credit card reader, take your payment at the end of the job. I like what you said about only paying for your, every job's on a separate timeline. I think that's totally correct. And that costing is where this really shows through, right? Well, that's really going to show you like, hey, this is how. And in another one, if you've never heard our episode on vendor negotiations, sometimes one of the big benefits of sticking with a supplier and making sure they get paid is they're willing to discount sometimes for that, reliability on you. Like I've definitely negotiated an additional 2% discount when I pay within 15 days instead of 30. Because again, cash flow is important for every business. Sometimes it's worth losing 2% to get paid faster.
Yeah. Almost any big supplier across the country will offer 2 net 10 terms, which is if you pay within 10 days, they take 2% off.
Yeah. Yeah.
Also, most suppliers appreciate somebody that maintains their mechanic lien rights because that allows them and helps them to be able to maintain their lien rights and make sure they get paid as well.
Yeah. I've had to put a lien on somebody's house before. It was a whole gong show. And if you want to listen to that story, it's one of the older podcast episodes. It's called How I Lost $22,000. Whole story there. But yeah, like, I cannot stress how important it is for you to have these systems in play to protect you in the event that you know, because we want to be nice, right? We want to be able to help everybody out and maybe help a customer out if they're, you know, I don't know, they crashed their car when they were just about to pay you. But here's the thing, like, your business survives on money. It is the earth that what your plant's growing, right? So you need that cash in order to keep yourself in a good spot.
Yeah.
Once we've been through that though, Jeremy, let's talk about overhead. If you're good to keep going,
Yeah.
I mean, yeah,
You bet.
you're good. Okay.
You bet.
But I want to talk about overhead. Personally, I find this is where, you know, kind of chaos hides. It hides between the lines in that overhead and in that profit and loss statement. Like, what would be the quickest way for a contractor to find their real monthly cost? Because we generalize, right? Everybody generalizes. Oh, I've got this in rent and this. Like, where do I find that information? What's my real monthly cost of this business? How do I find that out?
Yeah. So this is a very important conversation because as I said earlier, profit is not money in the bank account.
Mm-hmm.
It's not. It'll never be the same. It just won't. And it's usually because you're having to use money from your bank account to pay for things on the balance sheet rather than just on the profit and loss. But you know, the key thing to keep in mind with all this is that you need to know your cost to do the job, and that's all over here. But you also need to know your cash flow, which is what you're speaking to, right? And so the easiest way to do that is to come up with a cash flow projection. When you are figuring out how much it costs you to do a job, you end up with, okay, so my cost to do the job might be at 60% or 50%, right? But 10% of that is labor and 10% is materials and so on and so forth, right? And so you can guess based on those percentages and what you plan to collect each week.
Mm-hmm.
You can guess what those costs will be for that top section. And then you'll have all of your recurring payments that you can make a list of as well, so that you can know, okay, this is what we are expecting as far as those costs that move up and down. And these are the fixed costs, the payments that we have recurring and the dates they recur on. And then if you go across the top and list the weeks, you can now have a total each week.
Yeah.
On that tells you what's going to happen with your cash flow and how much you have to collect.
Yeah. So like a cash flow monitor that is saying, hey, each week in the month, here's how much cash you need to have in the bank left over from gross profit in order to keep yourself in a decent position where you're not going to get, you know, incur extra costs for late fees or something like that. Right.
Right. And we even take it one step further. If you know what your change in cash is estimated to be for that week,
Mm-hmm.
all you have to do is plug in your bank account balance at the start of the week, and it'll tell you this is what you can expect in your bank account at the end of the week.
Yeah.
And if you do that and drag the equation across, now I can see 4 weeks out, I'm going to have a dip in my account. I need to collect a little bit more
For sure.
so that we can avoid that.
Yeah, and I think having that tool or that level of insight is kind of like if you went to hospital and they hooked up your vitals, right? It's your blood pressure, your heart rate, and then when you're getting into your accounts with your accountant, and you're digging it apart, doing your financial means, that's where you're doing the blood panel. I mean, you're looking at all the
Mhm.
little numbers that made that happen. But cash
Yeah.
flow is the heart of your business. We usually say two things. We'll say there's two reasons why your business will fail, or three reasons, sorry. One is bad cash flow will kill you faster than anything else. Your uncategorized or miscellaneous expenses tab in your profit and loss statement, and go backs, having to go back to jobs over and over and over again because you didn't quote it right, or you missed something, or you didn't have that material in time. Those are the three things that will kill a business, especially a construction business, faster than anything
Mhm.
else.
Yep.
I love
I,
my cash
I,
flow.
I would add in though, I would add in there change orders.
Change orders, yeah, 100%. I would totally agree. Totally agree.
Scope
Change orders,
creep.
and that's exactly why I wanted to get you on this show, because your typical accountant isn't going, "What about change orders?" They might
Yeah.
not even know what a change order
Yeah.
is, right?
Right.
So
Yeah. No.
100%, man. Like I said, when we get into the weeds with your finances and we're looking through your profit and loss statement, typically the first thing I'll say to go to is go look at your uncategorized expenses. That'll tell you all of the things that your accountant doesn't know about your business. Because there could be labor in there could be materials in there. Everything's just getting hidden and pigeonholed. So go and break that out. And this is funny that we're having this conversation this week. We are just into a 5-week planning boot camp where we're doing this in the program right now, where we're,
Oh,
you know,
cool.
yeah. And it's mostly so we can plan out what are we going to spend on marketing next year? What are the
Yeah.
tactics we're going to use? How many
Yeah.
guys do we need to have? How much overhead can we float? I mean, nothing to the extent that you're doing right now, but just let's make it clear. Let's get those channels and those data sets kind of mapped out.
Yeah.
I want to talk about something that I'm pretty passionate about, right? When it comes to, well, one is my kind of lack of knowledge my lack of control with an accountant, right? This is a big one because a lot of us, we can't afford an in-house accountant, right? Or an in-house bookkeeper. We might not even be able to afford monthly accounting services, and we might be on a quarterly, and God forbid we're on some sort of annual tax filing, and that's it program. I typically preach best way to do it is at bare minimum have a monthly meeting. Have a monthly meeting with your accountant. How should people make that work? What kind of relationship should they have with an accountant? And this actually ties into one of our members' questions, who asked, how do we be good clients to our CPAs, our accountants, and our financial people?
So you've heard my story. Since going through school and working as an auditor for 4 years, I kind of understand the grind a little better. During tax season, your accountant is going through 30 or 40 profit and losses every day. And I can see very easily how mine would have gotten to my profit and loss, gone through it all, entered in the numbers, thought, oh man, this is crummy, and then moved on to the next.
Yeah.
Right. So there's no excuse for not saying anything, but I get how we get lost in the shuffle.
Right. Do you think that ties back into you called it the Parkinson's effect, right? Where your accountant is doing monthly accounting. Are they waiting until 2 days before or the day of to look at your books? Is there no prep in the run up to your meeting?
So some accountants, I'll say this, as a general rule, tax accountants do not touch your books. If your accountant does your taxes and does your bookkeeping, he has either hired somebody to come on board and do the bookkeeping, or he's outsourcing it to a bookkeeper.
Right.
And 9 times out of 10, those financials are never getting looked at by the accountant. If you have an accountant that is looking at your financials, it is a very special relationship that you have there, because it just doesn't happen. And accountants are notoriously bad at communicating.
Yeah.
I get so many stories all the time about, well, I just wanted this simple answer from my accountant, but it took me 8 weeks to get them to even respond. And so, obviously I offer solutions for that because that was my pain. And so I want to fix that. But you really just have to find an accountant you can be persistent with. If they are not going to meet with you regularly and they are not going to reach out to you and they're not going to respond, then have an office assistant or somebody like that that can just call them or text them daily or email them daily and bug them when you need something.
Yeah.
Right. The other thing that I would say is that if you want to meet with your accountant, expect to pay for it. And a lot of people don't really think of that much, but they put in a lot of time to learn and become the expert. They paid a lot of money for their schooling. They're running a business where that's what they do.
Right.
So don't expect to get your accountant to go sit down with you for an hour for free. Right. And you can work out some kind of package or deal.
Yeah.
So that, you include it with the tax prices, whatever. But
So very, very similar to what you were saying about it costs them a lot of money for their schooling and, they're working hard in the background. But I think for a lot of these guys, it's, well, where do we get the value? Right? Like, where do we get the value? And I think the value is if you've got a good accountant who at least looks at your books once a month. To me personally, my accountant should be the one who's telling me, hey, don't buy that vehicle this month. Wait 4 months and your cash flow and your forecast will be a lot kind of clearer. Not just, and personally, like when it comes to taxes, man, how much money are you missing when you leave your taxes until literally tax season? And that's when you start tracking down your receipts. And that's when you start categorizing things properly. At least if you take a little bit of time to do it every day and you meet with your accountant once a month, you can keep it clean up until the point of tax season. And then it's easy for everyone, way easy for everyone. But like I said, the bar is also on the floor for accountants. You do need to find a good one. And if you can't, consider bringing someone in-house. There's a lot of people, like even virtual assistants nowadays, who are trained in North American taxes that they study at school in like the Philippines, right? Or South America, where you can get them for $8 to $10 an hour. And here's the thing. If you don't hire them, the accountants hire them. And that's who's doing your books anyway. Yeah. Well, there you go. Right. I have a virtual assistant as well. I encourage these guys to get virtual assistants. The key thing is somebody's got their eyes on it. Somebody's watching it.
Yeah.
Right. Someone's keeping you informed. You might not understand what, the impact is of dropping, $10,000 on your EBITDA, but you might understand, oh, you overpaid for your cell phone bill by $300 this month. Wait, what? Why? Why did that happen?
Yeah.
You know what I mean?
Exactly.
Someone's keeping you informed so that you don't roll over 6 months and you go, wait, why have we been paying an additional $300 for my cell phone for the last 3 months, 4 months? You know? So this isn't a lesson about, don't go and become an accountant. This is a lesson about create channels that feed you data that you can then make good decisions based off of as a business owner. Yeah. I definitely feel the pain of that. Jeremy, I could keep you here all day. Honestly, I love this topic. We could bash on accountants as much as we want, but I want to get to some of our members' questions, right? And just for anyone listening here, we have a school community. School is a learning platform that's all online. We have training, we have a community chat. We post all of our podcast guests that are coming up, and we say, hey, hit us with your questions. And for this one, I got rushed a little bit by a lot of questions here. So bear with me for a second. I'm going to pull them. Pull them up here. But yeah, we had a few people reach out. couple of younger guys or a couple of junior businesses. One of them was that, hey, how do we be good clients for CPAs to a point where they want to help us out? But they also said, what can we do throughout the year so that they want to go the extra mile for us and set us up for success? Give me like 20 seconds max. Like, what can we do to be good clients for our CPAs and our financial people?
That is a difficult question because most of them want to just keep their heads down, file taxes, and move on. They don't want to have conversations with you. And so I think that you need to have a sit down conversation with an accountant before you hire them
Right.
and just see what their personality is like. If they come across more as a salesman, then I love to tell this joke. You know how you tell the difference between an introverted accountant and an extroverted accountant. An extroverted accountant will stare at your shoes when he's talking to you
I like
rather
that.
than his own, right?
Yeah.
But, and so you really do need to get someone, I think, in my opinion, that is eager to do something more. And you can usually find that in a conversation and with their personality.
Right.
And if it is somebody that seems more eager and more ambitious and there's more excitement when they talk about things, that's usually a good clue that they're trying to do more. So that's as far as how to get your current accountant to want to do more with you. Even money only goes so far. Like I said, most accountants like to stay in their little hole and do their work. And they don't want to come out and do a bunch of other stuff.
Right.
So if you can't find a way to get your accountant engaged, then look at maybe a fractional CFO or a fractional controller.
Right.
Those are people that are more interested in business side of things and in helping you figure those things out. And I hate to throw those terms out there because as soon as you hear fractional CFO, you think thousands of dollars every month. But you can actually get them for much, much more reasonable packages.
Right. And when Jeremy says fractional, all he really means is like part-time,
Outsourced.
chief financial officer. They don't have to be a named board of director member or anything like that.
Yeah.
They're just coming in with a very specific skill set and they work hand in hand with the business, not hand in hand with the government like your typical accountant does.
Right.
Yeah. Gotcha. I'm going to add in here to this for the guy who put this message in here, but I would just say to be a good client for your accountant, just be prepared to set up systems that are basic, right? Like they shouldn't have to chase you for receipts. They shouldn't have to remind you to update your mileage in your QuickBooks account. They shouldn't have, like, there's some simple systems that are kind of universal where if you're a complex client, they're not going to want to talk to you. If you're an easy client and you make their job easy for them, then they're going to want to work with you more for sure. At least that's what I've experienced,
Yeah, that's a great point.
Yeah. Moving to the next one, so one of the contractors asked me, like, what would be a good and this might not be your wheelhouse when it gets to like investments and stuff like that, but he said, what's the best investment strategy for a business owner, both for themselves and for their employees? Like, how can they start to plan for retirement and maybe start to compound some of that wealth that they're making in the profit side?
Yeah. So there's many different purposes for investing. Obviously you have for retirement, right? Which is what you mentioned already. The second is as an incentive for the people that you work with. The third is for tax strategy to lower the amount that you pay on taxes. The one that I'm really passionate about is for cash flow.
Right.
I'm not a huge fan of the Dave Ramsey model. And I'll tell you why. if I'm doing a job for $35,000, I'm giving that person a loan for $35,000
Right.
and I'm hoping they'll pay me back at the end, right? There are only three ways to get money. The first is from an investor. The second is from a loan. And the third is if you store up cash over a long period of time, right? So I have to get money from one of those three sources. Well, you're not going to really find investors for your construction company. That doesn't really happen. An investor would be more interested in coming in and buying you out.
Right. So it's unless you mean, say, like a parent or an uncle or a family
yeah,
friend who
of
wants to
course.
give you, yeah, exactly.
Right. Yeah, of course. Right. And it takes a long time to build up $35,000 in cash.
Mhm.
Right. And so we have to be open-minded when it comes to debt. If you have a machine and you put in $20 and you get out $5, how many $20 bills are you going to put into that machine?
Yeah. Very
Over and over and
Yeah.
over, right? You're not going to stop. And so debt needs to be approached from that point of view. If I can get a loan and put money in this end of the machine, and then the loan takes this amount out, but I still have a positive amount at the end,
Mhm.
then it's worth carrying, right?
Right.
And so when I'm talking about cash flow, number one, if your business has a good profit margin, you were talking 55, 60%, right? If you have a 55 or 60% gross profit margin, that's a machine that's going to spit out extra money.
Mhm.
So it might be a good idea to look at taking some of that money and investing it in things like marketing or new equipment or outfitting a new crew, right? Because you already know that if you put that money in the machine, you're going to get more out.
Yeah. To put it
And
back
so
in
you,
again. Yeah.
right. Yeah. Outside of that, I'm a big fan of creating additional streams of income, additional streams of cash flow, right? So an example I would use is like in a real estate investment trust on REIT, right? That is a great way to be able to take that money, put it into something else, to do not a ton with it, and then make money on it. And that produces additional cash flow. And the nice thing about that is that when you produce, say, $2,000 of extra cash flow, well, now you've replaced your rent on your office.
Mm,
That's paying for your rent on your office.
right. Which is something we just went through with one of our clients who instead of renting a bigger space, we decided to build a bigger space on a piece of property that's 3 times the size of his current shop so that he can rent 2 units out that pays for the build and he gets to move shop and still have more space so he can put out more production, right? More capacity.
Yeah. Yep.
So real estate investment, for sure. Yeah.
Real estate. Yeah. Real estate investment, particularly REITs because of the tax implications and
Yeah.
stuff like that.
Yeah. Because
But
obviously you want to
they're
be mindful of like capital gains and, you
Mhm.
know, putting money in your retirement or your savings account that you might then have to pull back out prematurely, you know, because you got, you know, your truck, you crashed your truck and now you need to buy a new one, right? You don't want to put yourself in that kind of space. I'm going to make a wild assumption here, Jeremy. I'm going to guess that you've got Profit First on your bookshelf and you probably have Rich Dad Poor Dad on your bookshelf as well. I'm going to assume. Yeah.
Yep.
Yeah.
Yep. And The Richest Man in Babylon is another
Yeah.
foundational one there. Even better to me, even better than Rich Dad Poor Dad is Cash Flow Quadrant.
Oh, okay.
It's another one by Kiyosaki, and
Mhm.
that has really molded my belief.
Yeah, I find that
So
if you're in any kind of like position where you understand finances, you're in one of two camps. You're in the Ramsey camp or you're in the Kiyosaki camp.
I I have an AI generated picture I created a while ago that's Ramsey and Kiyosaki dressed up as boxers in a ring facing off,
For
because
sure.
that is 100% true.
Yeah, absolutely. Absolutely. And I would say that like, you know, the fiscal responsibility comes down to you and what you can be trusted with debt wise, right? Like if you're someone who has a bit of a tolerance to you can handle a little bit of risk, you know, and you're willing to deal with the repercussions, take on some debt. It can really help you drive your business forward. But when it comes to like, I'm not responsible enough, I'm not in tune with my numbers, I don't know any better. And if I've got all this money, you know, all these debts out there, I'm going to mess up. Go with the Ramsey method, right? Like it's don't take on debt, try and have everything paid off, keep it clean, keep it structured. You know, there is no right answer here. But the only wrong answer in this is to do nothing, to not pay
Mhm.
attention to your books, to not understand your risk or that you can take. And like I said, if you're not going to be the guy that is going to stay on top of this, hire a professional like Jeremy, hire a professional like an accountant, hire someone who can read the book to you, right? If you just want to listen to the story, you know, hire someone who's going to read the story.
Mhm.
I've got a bit of a funny one here, and I know we're well over time, Jeremy, but this is a great question and
Oh,
a great
good.
guest to keep going with. But I have one of my guys here who said, Jeremy, can you please debunk the I need to buy a truck to save on taxes myth? When does spending $1 to save 30 cents actually make sense?
Yeah. So I hate Uncle Sam and I hate taxes. The tax game is kind of interesting because if you have $50,000 in your right pocket, the government's going to come in and take $25,000 out of it, right? And so instead, what you do is you take that $25,000 and move it from your right pocket to your left pocket. And then they come in and you're in a lower tax bracket. So they only take 10%. So they only take $2,500,
Right.
right? And so that is the strategy with tax planning. When you do tax planning, you don't necessarily get money back. What you do instead is, instead of me giving it to the government, I'm going to put it in a 401k or an HRA, or I'm going to pay my kids
Mm.
$12,000 each
Or your
working in my business.
or your wife to do your bookkeeping for you.
Right. Or the use the Augusta law and reimburse myself for renting my house out to my business 14 days every year. Right. I'm not keeping more money,
Mhm.
but what I'm doing is I'm creating assets, and those assets do pay out over time. But like I said, it's not a dollar for dollar exchange.
Yeah.
And so if you need a truck and you have the money to do a down payment for a truck, and you can get it financed or whatever, then yeah, it's a good idea to buy a truck at the end of the year. Well,
Hmm.
I can go into an agreement, I can buy $100,000 truck. I can finance it. I can have my $2,500 payment, $3,000 payment each month, right? It only cost me $36,000 a year, but I'm going to get $100,000 worth of bonus depreciation that first year. So it lowers my income by that much,
Yeah.
right? So yeah, buying a truck at the end of the year is not the end all be all.
No.
Buy a truck at the end of the year if you need one.
Yeah. I would say the same rule applies to, not just trucks, because I think at the end of the day, if you go out and buy a brand new spanking gleaming truck, the last thing you're going to want to do is put it in production where it's going to be out on job sites getting covered in mud and scratched up by the guys. You're going to keep that one for yourself. I think if you were to be realistic with it, let's say that you're a cabinet maker, maybe that's a CNC machine. Maybe that's a edge bander, right? If you're a electrician, maybe that's you're buying a trencher that you bring into the business and it goes on as your depreciate, assets and depreciation. You're bringing in a piece of equipment, mechanical equipment that you can rent out to other people. And then that way you're writing it off and you're creating another stream of income as well, right? Like there's many ways that you can go about it. Definitely think that, buy a truck. Like that only applies in some very, very some very, very specific circumstances and only when you need it, right? But at the same time, I don't think that, the government's going to be taking, 30 cents off you for every dollar that you make. Use it to reinvest in the business. You're going to keep pushing that problem off year over year over year, right? And then maybe there's another tax strategy that you could use because you've now got a piece of real estate or because you've now got, additional salaries or something like that.
Yeah. Buy a truck at the end of the year is a very, very lazy tax strategy.
Yeah. Yeah. 100%. 100%. And plus, if you've left it so late to the point where the only thing that you can do is go out and buy a $100,000 vehicle, there was probably something you could have done each month that you used that money for to grow even bigger, right? Or, and we saw this during COVID with a lot of our clients where they were scrambling to buy things like CNC machines or big equipment. And then they find out, because of all these issues with transportation during COVID, you can't even get a CNC machine for 6 months and they're not even going to sell it to you.
Uh-huh.
We actually saw one guy who had to go out on the 23rd of December and buy a Rivian electric truck because that was his only choice. He had to ditch, thousands and thousands of dollars to buy something he will never let a single guy on his crew drive, ever. Never.
Yep.
So there you go, Glenn. That's how you deal with that one. Don't buy the truck. I think maybe he was hoping you would say, go buy the truck. I don't know. Let's see. Won't buy the truck. And if you want to buy the truck,
in that case, go buy the truck.
Yeah. Before any of you buy the truck, call Jeremy and ask him if he can buy the truck. He'll be your voice of reason here.
Exactly.
Jeremy, I'm going to wrap things up here, man. You've been an absolutely phenomenal guest, and for doing this on the fly as well, it's been great. Why don't you do this? Why don't you plug yourself? Tell people your company, where they can find you, how to contact you, and we'll make sure that we put Jeremy's contact details in the show notes and in our school course. Jeremy, how do people find you?
Yeah, so my company's Foundation Accounting and Consulting, and my website is Foundation ACS, which is accounting consulting services.com. Foundation with no S, it's just Foundation, ACS.com. And I have info on there, and I have a link to book an appointment. I'll do a free 15-minute conversation with anybody to see what their needs are and how I might be able to help.
I love that. And you work coast to coast, right? You're with anyone in the US? Gotcha. Awesome. This is gold, guys. Hopefully you've taken tons of notes. If you want to stop guessing and build a real financial foundation, go check out Foundation Accounting and Consulting. I will link it. Thanks for being here, Jeremy. Guys, I'll see you on the next podcast episode. Thanks for tuning in today.
Thank you very much.